Hey, this is Chris, and today I'm going to be talking about what happens if an ETF shuts down or an ETF issuer goes bankrupt. Both of these are pretty rare, but it's good to know what happens in that sort of scenario. So first of all, if an ETF shuts down, now this actually happens probably more often than you'd think. Last year in the US, over 150 ETFs shut down, and it was a bit less in Australia, but ETFs do tend to shut down sometimes if they don't get the sort of scale they need in order to justify being open. So if they don't get big enough, they don't earn enough in fees to basically pay for themselves. This tends to happen more often with more niche ETFs that follow a very specific part of the market or a small asset class that not a lot of people are interested in. Fortunately, if it happens, the good news as an investor is your money is pretty safe, but there could be some capital gains impacts. You'll usually be notified at least a month in advance, and you'll get the choice to either sell your investments on market or sell them to the market maker when the ETF shuts down, or occasionally you might get the chance to actually receive the investments that sit inside the ETF. So receive the shares, for instance, that are inside the ETF, but that doesn't happen always. In the event that you have to sell to the market maker or on market before the ETF shuts down, unfortunately this means you'll probably realize some capital gains or losses, which is probably not what you want. And this is why we, for our clients at StockSpot, try and avoid ETFs that are at risk of shutting down, just because it's not something you really want to go through and have to realize capital gains. So the bigger worry for a lot of people is what if an ETF issuer goes bankrupt? So one of the big companies that issues ETFs. And the good news again is that your money is actually safe. So if an ETF issuer shuts down, the ETFs themselves are held in a trust by a trustee, and so the assets are segregated, and therefore you are not at risk, or you don't really face any credit risk from the ETF issuers. Usually what would happen is someone would take them over or take them out of bankruptcy, and maybe the brand of the ETF may change, but really your ETF assets are safe and they don't have any ability to take them away, and so you don't need to be worried about that either. If you have any other questions, please ask them in the comments below, and we'll be doing more videos about ETFs and their structure, so please subscribe.